Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Tuesday. And we are sitting here now at the 29th of November, 2022, 6:40 p.m. Central Time. Yay! The American team. Did you watch the soccer game? I admit I am not a big soccer fan, but how could you not watch that game? I got very excited. I remember when my son was playing soccer. I tried to understand the game, and it's just so foreign to me. But a lot of running, a lot of hitting, a lot of falling, a lot of getting hurt, and it was a good game, 1-0. So we move on with the Netherlands. Now, I do want to remind everybody, we've had our Cyber Week sale going on, and that sale is running down. So if you're going to take advantage and you want to get one of my free offerings, this is the time to do it, because I'm going to raise the price on everything next year. So I've already made up my mind, been talking to the IT department. We're getting ready. There'll be price increases, but you get your choice with any 1-year subscription to my research, and there's different programs you can go with. My full charting course, my enhanced Bollinger Band course, my outside day course. Choose one of the three. And I think you'll find it's pretty good. On the outside day course, it's really a continuation course is the right way to do it. Outside days are continuation patterns. I explain it. I teach it. I recorded another one of the chapters today. I'm probably no more than 2 or 3 chapters away from just calling it a day. I'm done. So that could happen. I'm doing 1 to 2 a day. It could be all through by Thursday or Friday. So that will be ready to roll out. And as I said, I promise you, I'm raising the price on everything next year. Why not? Inflation's here. I haven't gone up on my pricing, in all honesty, decade in some of this. Certainly in the full charting course, I haven't gone up in a long time, but it's time to do that. So you get all this. It's going to run out, this free offer. Now is the time to do it. Don't procrastinate. You'll all of a sudden say, oh, Ira, I get people all the time. Hey, will you still honor this? Let me explain. No. It's now. This is when you do it. So just move your cursor to the top here. You'll see an icon during the whole video. Give it a click and away you go. Now, let's talk about where we're at in these markets. I was very wrong in the stock indices. I had bought them. And I had bought the Dow, to be specific, and lost on the trade. Okay, not a huge loss, but I lost on the trade. I was very right in the dollar, smelled it before the rally today, and turned what had been a trade that was starting to go against me into a winner and was able to walk away. And that's got me flat the markets going into tomorrow. And guess where I want to be? I want to be flat the markets. There's too much coming out right now. You got to go through whatever Fed Chair Powell is going to say. In my mind, and that's all it is my mind, he's going to end up saying one way or the other. They're going to be data dependent. They're hoping the data weakens. They get jobs data. They get the JOLTS data coming out this week. They are going to get CPI very shortly. And then we get the FOMC right in our living room telling us what they're going to do. The market widely expects a 50 basis point rate hike, not a 75. But the length of continued hikes is where we're at in thinking. It's not just are they going to be 25, 50 points. They'll be in that range if inflation and jobs wobble. If they don't wobble, 50 or 75 basis points can be there. Why do I want that exposure going into the report? So I'm a little concerned. You've got to start thinking about the energies too, because what's going to be a little bit scary there is OPEC is meeting this week. They want to defend price. They can't be happy that instead of 9 in front of the February Brent, that it's got an 8 in front of it. I don't think they like that at all. But when we come to the metal markets, it's going to be a mixture of the dollar and what goes on. I'm impressed that copper came back. It's not at 370, but it's holding nicely in the 360s. And that's because President Xi of China, he said that he would make maneuvers. But you didn't see clampdowns last night. I'm hoping there's none again today in China. And this whole event starts blowing over as he's got to realize, and I think he will, that this zero tolerance policy just doesn't work. The people don't want to be shut in, and they're letting them know that. The last thing you need is a revolt. China doesn't handle revolts real well. You know that. The military comes out, the police come out, it can get nasty. None of us need to see all that. All right. So in the gold market, you flattened out. I think you'd agree with that. If you look at the weekly chart, you haven't gone anywhere in a short while here. There's a lot waiting. I think the market's in a holding pattern now, wanting to get at least the jobs data. Then I'll be saying they want the CPI data. And then I don't care what the Fed does. If they both wobble, we know what the Fed is going to do, and we start seeing how it plays out. We'll then all be focused on the dot plot, seeing what members think. But until then, how do you play this? Well, if the dollar weakens, and I'm in the camp that ultimately the dollar weakens now. I'm not in the bull camp for the dollar. Charts are just bearish. That is going to be friendly to gold. But gold's in a holding pattern. If you don't see that, I don't know how to grab hold of you and shake you and say, take a look. That's what the pattern is right there. You don't have a trend. You have a higher high and you have a higher low at work. You're riding the 18-day average. You did get a bullish crossover. The market made a high, but it didn't go for that high. It's a disappointing crossover so far. You don't have the oomph in the market. I don't know what the event is to make it move up, because what's going to come greeting you shortly is your nightmare of the Bollinger Band top coming down. In fact, these are starting to wrap their arms around the market. So you probably are looking at volatility soon going to come out of the gold market. You heard me, out of the market as it waits on these major reports. Momentum-wise, down. So you're just sort of drifting in the market here. The gold-silver ratio, well, silver's got to get back under the red line, which is the 18-day average of closes, if it's going to gain on gold. As long as it stays over it, it doesn't go anywhere. And you tell me the battleground. This is what the gold is probably going to do. Here's your 200-day average resistance, your 18. And notice how the arms, the bottom and the top of the Bollinger Band, are wrapping themselves around it, because this market's married itself to the 18-day average and just going sideways against it. That means volatility coming out of the market right now. In the copper, not quite there. Copper's trying to figure out what to do, but do you disagree that it's caught at the 18-day average and just sort of hanging in? If you're to break hard off of something that happens in China, I'd look for big support at 350, 120, right in that zone. If the market can move up from here, I don't see a breakout number that gets me going anywhere. The chart pattern, it's easier to turn bearish than it is bullish on this. Don't know what to do with it, but you are oversold. In the platinum market, similar to the gold and the silver, look at how all of a sudden you just keep shrinking away the Bollinger Band. And the market now for a week and a half has been stuck at that 18-day average. Learn to recognize that. It's not the place you necessarily want to put your money. And the palladium's been in a downtrend, but downtrends get resolved in one of two ways. When you get an oversold reading, an oversold I define as when the slow stochastic reading gets underneath 30, either of the numbers. Then to embed means locking in the trend. Both have to be going under 20 for several days or more. You're not at that point. You're just oversold. So you're either going to embed, which would be, again, very bearish and driving the market down, or the market starts a correction the other way, and this market starts targeting the 18-day average. I don't know which one, but I'd like to point out where you're at. As for the dollar, it was time to call it a day on the shorts. And you heard me say to start this off that I'm not in the bull camp on the dollar, and I'm not. I'm in the camp that longer term thinks that we have a lot of resistance between the 18 and the 100-day average of closes, but I'm also respecting the 200-day average that you couldn't make it to, and a market that just lost its embedded reading, all right, or the attempt at that reading. Because if you come back here, let's see if it ever did embed together. I'll show you what I'm getting at. Okay, both numbers underneath 20, under 20, under 20. That's called embedded. Then you get this reading where you get over it, and when you get over 21 on it, game is over, and you probably are headed to the 18-day average of closes. When you learn these techniques, it really helps a lot putting together a trading plan. Not everything works. I mean, that's what trading is about. Trading is not investing. And in investing, not everything works. If you've been buying stocks this year, you're probably underwater pretty good, but you're an investor. You've got a 5-year or 3-year or whatever the heck window you're playing with, and you're doing whatever. I mean, isn't that what the Kramers of the world and the others do? There's always a bull market, is what Kramer says, if you can survive for it. That is the problem. And, it's hard for people to hold on to things that are losing, although unlike a trader, they're not looking at it every day. They get their portfolio. Some people don't even open it. They just go, I know how it's doing this month, throw it away. I'll look at it another month. I have friends that do that, and they go, hey, I want to be invested. I believe the market will come back in a monster way. They're right if you have the staying power. I've yet to see the market not come back over time. So I agree with that. But over time, there's something else. Take advantage, if you will, of this free offer, because time's not on your side. Now it's running out because this is going to end very shortly. Just take your cursor, move it up here, give a click, and away you go. I'm Ira. Have a great day.